BlackPearl Capital Partners is an independently owned boutique investment manager specialising in alternative investments and direct equities. We manage funds on behalf of sophisticated investors, self-managed super funds and retail clients. Through the BlackPearl Masters Fund, we offer investors the ability to access investment strategies managed by some of the most talented and best performing hedge funds in the country. Each strategy is unique, and with this multi-strategy approach aims to generate more consistent returns with less risk compared to traditional investment methods. That means we take advantage of both rising and falling markets, something we see as a large advantage compared to traditional approaches. Our funds implement alternative investment and trading strategies that have the ability to make money under different market conditions and equally are very difficult and in most cases impossible to replicate. Gaining exposure to a basket of uncorrelated absolute return funds pose significant investment competitive advantages. These include and aren't limited to hard to access corporate networks, exclusive data sets, proprietary quantitative models, proven track records and unconstrained mandates. Key to the performance of the fund is based on a number of factors, which are diversification of strategies focused on capital preservation with the ability to generate returns in all market conditions. Diversification of stocks with a global allocation that reduces geographic risk. The ability to take advantage of market movements without reliance on market performance, providing investors a distinct advantage. An experienced and dynamic team capable of generating significant alpha and targeting consistent returns with lower volatility. For the month of June 2021, the BlackPearl Masters Fund was up 2%, and for the quarter, the fund was up 8.1%. For the 2021 financial year, the BlackPearl Masters Fund generated a return of 30.5%. Reviewing the 2021 financial year, the fund's performance in the first half of the year was driven by exposure to growth stocks, which were bid up by investors post the pandemic market sell-off. During the second half of the year, the fund benefited from a rotation from growth to value and cyclical stocks, which our strategies were able to adapt to very well. Additionally, the fund benefited from significant exposure to the resources sector, with commodity prices being driven up by strong pent-up demand, as well as in some cases supply chain bottlenecks. Copper, iron ore and lumber prices all hit record highs during the year, while wheat, corn and soybean prices reached their highest levels in 8 years, and oil prices touched a 2-year high. Many of our fund strategies got positioned in resource stocks early and were beneficiaries of the strong resource sector performance. Looking forward, we continue to see the extremely accommodative monetary policy from central banks and fiscal stimulus from governments as a strong tailwind for equity markets.